Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, September the 27th, 2013. A lot to be gained from today's market analysis. Look at the Dow Jones Industrial Average. You'll find the same thing on the S&P and various other charts. I'll look at a couple of them today. Looking at the Dow Jones Industrial Average, you can see that we've talked about this before. You get this pullback here is what we wanted. We want to see this pullback to the 50-period moving average. Notice this high point here. It's lower than this one here. And the one following was lower, and the one following, and so forth and so on. This continued until yesterday. That changed yesterday when we got a reversal signal here. This is an inverted hammer, and it calls for a move back in the other direction. And now we told you in yesterday's video that happens, but it doesn't actually mark the bottom very well. So we like to see one of those right here. We see one here, and then we see another one here. They're not actually used for calling the exact bottom, so we prefer the hammer candlestick formation, and that formed today. So we've been waiting for that. We'd like to see that here, and that's fine. And what's going on here, when you'll see that if you actually look at this, you can see we've closed lower here today than we had 2 days ago here. So we're trending down like that. But then if we go up here and we look at the ultimate oscillator, we see that momentum is actually not going lower. It's showing a weakness on the move lower. That makes sense because it's what you saw yesterday, higher high than you'd seen the day before. So you can see how that was starting to break down. That bearish move is starting to falter here. And so if we actually just look at 3 days, we could say that we have a down day right here, we have an up day right here, we have a down day right here. Typically they'd be followed by an up day the following one, kind of like this. You have a down day, an up day, a down day, an up day. It's just called kicking. It's where bottoms are found. You find here up day, like so. Okay, that's kind of normal. So this situation here is actually still perfectly normal for a bullish reversal situation. We still have a high point here, a higher high here, a low point way back there, a higher low here. We have a pullback here, still higher low than we've seen over here. All this is still a very bullish uptrend. You'd be looking for buys in these scenarios. The only reason why you sold off today is because this is Friday. We're going into the weekend. You're going to hear a lot of rhetoric about the debt ceiling issue that's going to be keeping the market in check for a little bit. And then eventually they're going to come out and say, okay, fine, we're actually going to do what everybody knows we're going to do anyway, and that's just raise the debt ceiling. So we're going to end up going higher again once that news comes out. And that'll probably happen very quickly. And so I wouldn't wait for the reversal to happen for the confirmation in that scenario. So if you're anything like me, you want to get involved in this move back to the high, then you want to get involved before that news comes out. Because once the news is out, the market will just go, and then you'll be trying to chase it, buying up here. It's better to buy down here. Whenever you're looking at the Dow Jones Industrial Average, another technique you might use, if you're a Dow theorist or purist, you would definitely be looking at the trend to confirm. You want to see, are you getting confirmation on the Dow Jones Transportation Average Index? And in this chart, you're seeing a high point here, higher than you'd seen over here, pullback here, perfectly normal. Note the 50-period moving average, you're trading above that. You're still bullish. You're looking at finding hammer candlestick formations. You're getting that. There's nothing about this chart that is bearish, and so the stop is still set off the previous low here. We'll just keep an eye on this and watch this guy. You may pull back down on Monday and continue to do this until the news finally gets out that you have okay, the government's going to come together. But until that news happens, you can still see some fear in the market. Once that news is out, she'll take off and test the previous high. Okay, it won't matter if I look at the German DAX composite, or if I look at the FTSE, the MIB, the French markets. They're all going to look basically the same over there in Europe. And we've out of this position. What we had here is a nice move here. Note the low point. You pull back down. You get hammer candlestick formations at or below the 50-period moving average. That's where you want to be your buyer. So you got a hammer candlestick formation. Another one here. Note down day, up day, down day, up day, down day, up day. It's just that sideways kicking activity like you saw back here before. That's a consolidation right there. Then you get this move higher. That made sense. We took advantage of this move up the upside. Saw this nice gap up here with a little bit of a kind of a shooting star formation or doji, whatever you want to call it. But the basic concept there was that you had peaked out, you're going to consolidate there. So we rushed our stop loss limit from down here where it was off the low all the way up here to this point here. Is that blue line that you see on the chart. That's that stop loss limit there. And then we just got stopped out. What's going on in this market right now? People keep asking me, what do you think about the German DAX or any of the other European markets? All you've done here is you had this nice move to the upside, and you consolidating. That's it. And then we're going to continue to move higher is what I would anticipate. You could, in some of the charts, you are seeing a kind of a pullback at that point. You're getting a little bit long in the tooth instead of breaking down to pull back to that 50-period moving average. that'd be fine too if you can get that entry opportunity at that point. Remember, this was resistance here. You were bouncing off of that. Well, now the resistance has been broken out, so you'd be looking for that to be acting as support. So any kind of a pullback you would get there with the hammer candlestick formation will be an entry opportunity. Look for a test of the previous high. Another way you might do it is watch the market. If it continues to move sideways, when it breaks out and you see it close higher, that will be another buy signal. Quick glance here at gold. Silver, of course, is going to be basically tracking gold, so we'll just look at one chart today. We told you this was very bullish. We've been bullish on this for a while, since back in this time period here. When you got up here, we told you were going to close above the 50-period moving average, and that would be a buy sign, a buy signal whenever you're doing that. And typically, if you're in a bearish position, you'll be trading away from the 50-period moving average, but we're not seeing that here. We're getting bullish. We're getting higher highs, higher lows. That is a bullish chart formation. You want to be looking for long opportunities. I told you this pullback would be a buying opportunity, and gave you that. Then you had another method to use was simply you draw that trend line and see when you close above that, you would know it'd be a buyer, and that happened here. And you had a test of that previous resistance acting as support here, and she continues to move higher. Everything made sense. We did take our profits on silver when we got to this point. We didn't in gold. We left it here because we don't believe the move is truly over. This is just a pullback, and then we get this pullback that comes down to where the 50-period moving average. And what do we see? Hammer candlestick formations, up day, down day, down day, up day, down day, down day, down day, up day, up day. This is just that sideways kicking activity, that consolidation we've seen before. This is normal, and you be a buyer still. This is all makes sense, and expect us to start to close above the 50-period moving average and move higher and test the previous high. Quick glance here at the NASDAQ. This chart looks a lot like your European charts. You've had a nice move to the upside here. We didn't get involved in this, and then again, consolidation at this point right here. We're just kind of doing this number. I would like it better if it would break down and pull back down here to the 50-period moving average, the hammer candlestick formation. I might consider that as an entry opportunity, but at this point here, I don't want to get involved. If you are a bull of the NASDAQ, you want to wait for a breakout above this downward trend line right here. When you close above that, you can use that as a buy signal, and then let the second move, this first leg here, will be duplicated out the other side. A quick glance here at the Russell 2000 Small Cap Index, the same basic overall story. We had a nice pullback in this one, so we took advantage of that because you come up here, made this move, and kind of pegged out for a little bit here, and a little head and shoulders activity. Down we went here, and then what do? We go down, up, and then we start to do the same thing again, down, up, down, and back and forth. And then we get the hammer candlestick formation reversal signal at the 50-period moving average, confirmation the next day. This is a good buy signal. She advances up here, and now she's consolidating. But where is she consolidating at? The previous resistance point. So basically, you're at a support area. You're just going to move sideways here. That's fine. You can get involved or stay involved like we are here. Our stop is right here, or you can wait for a breakout. And so that's however you want to trade it. But I'd be looking for this right here, this low point. Actually, it's right here. All up to this point. Duplicate this out the other side up there. Quick glance here at the SPX, or the S&P 500 Large Cap Index. This is a beautiful chart. I really like this one. And this is much like your Dow Jones Industrial Average chart. And again, this is something that if you want to get a good temperature gauge of the overall U.S. markets, looking at the S&P 500 it tells a good story here. What we have is, again, the same as condition we talked about before. Nice move up here, higher high than you'd seen before. So that gives us a higher high, higher low. Low points here, higher low here, high point here, higher high here. So the trend is clearly up. So all we're doing here is looking for pullbacks that will give you a nice entry opportunity. That means when we see a pullback coming, that's fine. We want to see that pullback coming here to the 50-period moving average and get involved at that point when we see hammer candlestick formations, just like you see right there. So that looks perfectly fine to be a buyer of that. Stop will still be set way down here on that uptrend. But then again, I want to point out that the news is going to be driving the markets a little bit crazy. So you could see, and that's why I wouldn't just set a stop right here. It could be too tight, and you'd end up getting stopped out still above the 50-period moving average. It wouldn't make any sense there to put a stop there. So my stop is still way down here, watching for this to come up here and test this high and go higher. This candlestick formation here, the high point here, this is a continuation signal. So I would be looking for this to actually hit up here and then keep going. If you've not been to the free website at perfectstockalert.com, it is right there. It's 100% free, and all we ask in return, please refer a friend. I'd like to remind you the Dow 30 Alert section here. These are the individual companies that make up the Dow Jones Industrial Average. There are many companies within the average that are showing great buy signals as well. So if you don't want to trade the average with options, you can go find the individual stocks that make up the average, and you will find some of the same setups. So that's important to check out there. We've already notated those charts, and we analyze them nightly and show you new signals that we see as they develop. market analysis section here, of course, if you go here to the market charts, there's my personal charts, the short-term 3-month daily, as well as the long-term 2-year weekly. Check them out. They're updated nightly with different signals and notation, including stop-loss limits and the entry signals and exit signals, things like that. And then, of course, over here, if you go to the trade school section, we've updated this, so you can go to the trading methods and you can find all kinds of trading methods here that we recommend you learn about and use. And then the tutorial videos, of course, will cover technical analysis or fundamental analysis. And last but not least, the chat room. The chat room has been a new feature we're bringing out, and I'll try to have it completed this weekend for you guys. So be looking for that definitely on Monday. We'll be able to go live and show you guys can interact with me intraday as well as other traders and get insight and different variable pieces of information that will be very valuable rather than waiting for the close in the video. Okay? God bless, take care, enjoy your weekend, and I will see you all on Monday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.